Hello everybody. So in today's video, I'll discuss the concept of beneficial ownership. This one particular concept is common and it's relevant to the articles 10 to 12 related to dividends, interest and royalty. In another video, which I'll subsequently upload, I will discuss some important international case laws on the concept of beneficial ownership, which will make this concept clearer to understand. So, the concept of beneficial ownership in the context of international tax essentially is found throughout Articles 10, 11, and 12 of the OECD Model Treaty. It was first introduced into the 1977 version of the OECD Model Treaty. The meaning of the term beneficial owner is discussed in paragraphs 12.1 to 12.7 of the commentary to Article 10 in the 2017 version, as well as the equivalents in the Article 11 and 12 commentaries. So the benefit of a reduced rate in Article 10 and 11, as well as no taxation, which is provided in Article 12, are subject to fulfillment of the recipient being the beneficial owner. So that's why this concept becomes highly important to understand and to also understand its practical applicability and how to find out who's the beneficial owner. Now, the recipient of a dividend, interest, or royalty is the beneficial owner of the payment when he has the right to use and enjoy the dividend, interest, or royalty unconstrained by a contractual or legal obligation to pass on the payment received to another person. This rules out the possibility of considering the persons acting as fiduciaries, agents, or nominees as beneficial owners. So what becomes important here is that the person has the right to use and enjoy the dividend, interest, or royalty unconstrained by a contractual or legal obligation to pass it on back to back to another person. So this particular provision is really important, and a lot of emphasis is there on these words. So what it essentially says is that the person who's receiving the dividend, interest, or royalty should have the right to use and enjoy that dividend, interest, or royalty. It should not happen that he is acting in a fiduciary capacity or as an agent, and he's just passing it on to another person back to back without actually using that dividend for his own use. So the commentary also does indicate that such an obligation normally derives from legal documents and on the basis of facts and circumstances. The purpose of beneficial ownership provisions is essentially to reduce the treaty shopping, as that would normally involve the imposition of an intermediary entity, because the person who would otherwise be the true owner of the income is resident in a territory without the benefit of a treaty. Now let us look at a few examples. So this particular slide, it has a very basic example which demonstrates how the use of a legal entity or arrangement can obscure the identity of a beneficial owner. When an individual is the sole shareholder of a company and controls it directly, that individual is the beneficial owner of the company. However, there may be more layers involved in the ownership structure, perhaps a chain of entities between a legal vehicle and its beneficial owner. So in the figure, the example which is on the right hand side, it shows an additional layer, which is the limited liability company between the legal vehicle, the joint stock company, and its beneficial owner. So this is what we are talking about. Now, the LLC as the shareholder of the joint stock company is its direct legal owner, while the beneficial owner indirectly controls the joint stock company through the LLC. So the provisions of beneficial ownership come into place where this particular structure is set up essentially to take advantage of some tax rates which are prevalent or some tax benefits in different countries. Now, in um, uh, certain entities, they may also explore setting up a complex system of legal entities. So, like for example, the example which is given on the slide. So, there's an individual, Mr. Smith, who wants to evade taxation in his country A. So, if Mr. Smith owns several properties in country A and holds bank accounts and investments there, all in his own name, it would be very easy for country A's authorities to detect that Smith is not paying the taxes or he's evading certain taxes. So the tax authorities would be aware of all his assets due to certain, there are declarations which have to be made, or there are certain cross checks which have been undertaken by the authorities, or by way of some real estate registrations, etc. So the authorities will be aware of his assets that they have not been declared and that the related taxes on wealth and income have not been paid. But if Mr. Smith wants to obscure his income or property ownership, he can easily create a corporate structure across various jurisdictions to make it much more difficult to identify his ownership. So the point is that the longer the chain of entities between a legal vehicle, so in this particular example, company A and its beneficial owner, Mr. Smith, and the more jurisdictions the entities span, the harder it becomes for the tax authorities to identify the beneficial owner, given the need to determine who controls each of the layers. Another factor that makes it difficult to identify a beneficial owner is sometimes the nominees which have been put in place. So the use of nominees whereby an entity allows its name to appear as a shareholder or owner in the name of someone else whose identity may remain concealed is prohibited in some countries, but it is also legal in some others. So in some cases, nominee shareholders mask the real beneficial owner. Now coming to the question of how are these beneficial ownership declarations made. So several international bodies and organizations, they focus on issues related to beneficial ownership. An important development in recent years has been the G20's call for more integrated cooperation between organizations on this issue. Now, in 2013, the UK, for example, announced it would be creating a register of beneficial ownership for all the companies incorporated in the UK, available in the first instance to law enforcement agencies. Similarly, India also has a register for beneficial owner under Section 90 of the Companies Act. The same needs to be filed with the registrar. In March 2019, the OECD published a beneficial ownership toolkit to help countries implement international transparency standards for information on the beneficial owners of companies and other legal entities. So the link that I've provided on this slide, it is for that particular toolkit. It provides suggested approaches to ensure the availability of beneficial ownership information, such as adopting a legal definition of the term prohibited inactive entities from retaining juridical powers and introducing specific disclosure methods for nominees. So the toolkit shows practical ways in which the principles of beneficial ownership can have an impact on exchange of information, on request peer reviews, and also highlights the importance of beneficial ownership information in the automatic exchange of information regime. So what I'll do is I'll just copy this link and I'll also put it in the comments below. And this particular toolkit mentions that as part of the common reporting standards, committed jurisdictions are required to obtain identification information about applicable financial institutions, account holders, and controlling persons. So that's it for this particular session. This was on the concept of beneficial ownership. I will be also uploading another video on all the international case laws on beneficial ownership. If you have any queries or any questions with regard to this concept with respect to international taxation, please feel free to reach out to me by way of an email or by way of a comment of this video. Thank you for listening. See you soon.